Welcome back to another week of growing your savings using blue chip stocks. Today is April 11th. Prices were updated last Friday. Last week was steady with neither big gains nor big losses. So we're going to check in with our listing of Canadian stocks on the TSX and our US stocks on the New York Stock Exchange and the NASDAQ, as well as my 4 fantasy Toronto Stock Exchange portfolios to see how they're doing. The Russian-Ukrainian conflict is still having an impact on the resources sector, in a good way though. This sector is still recording strong gains since the beginning of the year. So our $5,000 portfolio is back up to a 6% gain on the year, up from 5% last week. Our $10,000 portfolio is up to 7%, which is up from 6% last week. Our $25,000 portfolio is holding steady at a great 8% increase on the year. And our $100,000 portfolio is holding steady at a 2% increase since January. Remember that most GICs and savings account will only pay you 1 to 2% annually. As well, you are in this to grow your savings and your stocks are paying dividends. Blue chip stocks are a slow and steady growth. You aren't going to get rich overnight, but the earlier you start investing, the more you will gain in the long run. Starting with our Canadian portfolio, we've got the manufacturing and industry sector is still showing a sort of a half and half mix of gains and losses. Still down though 5% on the year. Manufacturing and industry, of course, is still being hit by supply chain issues, as are consumer goods and services. However, consumer goods and services, you'll see we have a 1% gain overall this week. So we've got a little bit more in the green than we do in the red. We've got Loblaws, for example, is up 22% on the year. Started the year in January at $96.68 per share, and we are now up to $117.74. Finance still taking a long time to recover. We're down 6% overall, and a couple of our stocks have actually gone over a 10% loss. CIBC is down, Home Capital Group and IGM are down. If you remember what I've said in the past, though, don't forget these are very, very strong, dependable companies. And if it was CIBC, for example, if it was $165 at the beginning of the year, it's dropped down to $146 right now. You know it is definitely going to get back up there before the end of the year, possibly before the summer. So these ones that are down this kind of percentage, these are the ones that you want to buy right now. Those are the ones that are going to give you the biggest gain. Resources and commodities were already up 26% on the year. Nutrien is now up to 44%. It's almost doubled its money since the beginning of the year. Good on you, on those of you who have actually invested in these resources and commodities. Utilities also still solidly in the green. We've got an overall average of 12% gain for all of our utilities. Great companies to have gotten into. So the Canadian market is up 3% on the entire year. So we'll flip over to the US side, and manufacturing and industry is still showing more in the red than in the green. We do have some good gains, like Cintas, for example, is up 10%. Archer Daniels Midland has been slowly gaining over the past 3 months. We're up 34% on the year. If you look at the actual weeks, it started the year at $71, took a slight dip the second week, but it has steadily grown every week since, and we have gone from $71 up to $95.25. So manufacturing and industry the average is down 6% overall. Consumer goods and services, not too bad. Our average is 1%. We do have some big dips in FedEx and Gannett, but then we've also got McKesson and Nordstrom have over 20, or McKesson is almost 30%, Nordstrom at 25%. So it averages out, so we're only down about minus 1% in consumer goods and services. Keep in mind that as the supply chain issues resolve themselves, many of these companies are going to come back strongly. Finance, we're starting to get more coming to the green. If you remember, in the last couple of weeks, only American Express and Visa have been in the green. We've now got Broadridge has gained 1% on the year. PayPal still down 36% overall. I would say PayPal is still a good one to get into at that low rate. Resources in the US side were up 35%, holding steady from the past weeks and gaining every week. And utilities, we have 3 of them in the green now. We have an average of 2% in utilities. Only one, AT&T, is still slightly depressed. So the US market is not performing as well as the Canadian market, down 3%. The Canadian market is actually one of the best performing markets out there this year. So let's take a look at our fantasy portfolios. We're going to start with our $5,000 portfolio. We are up 6% overall. Only finance, of course, and manufacturing and industry are in the red. So CP Rail is only in the red by a little bit. We started out the year at 94.64, and we're only down to 94.35 right now. Although if you look at some of the weeks past, we have hit higher marks, such as in March, it was $100. The end of March, it was 103.32. So you know it's going to get back up there. Our overall gain for our $5,000 portfolio, we are sitting at $5,380. We've got a $29 gain on the week. That offsets the $157 loss we took last week for an overall gain of $297. Dividend income has not changed yet this month. We are still holding steady at a yearly payout of $187.44. So our $10,000 portfolio, we are showing a 7% gain. Everything is in the green except finance, which is to be expected at this time. Finance is down overall. We've got some good gains here, 17% with TC Energy, 26% with Imperial Oil. The total value is $10,787. So we are up $157 this week, which is up from losing $25 or being down $25 last week. So an overall gain on this portfolio of $951. Dividend income is still unchanged in this portfolio, paying out $357.66 on the year. So taking a look at our $25,000 portfolio, we have an 8% gain here. Everything is in the green except we've got Linamar is still down 36% overall. Still a really good time to get into Linamar. I myself have bought extra Linamar this time because it's down so much. Finance is down as shown before. So averaging out though, 8% gain on that portfolio is pretty good. Our $25,000 portfolio is now sitting at $26,731, up $79 this week, up from our little pullback. We lost $167 last week. So an overall gain of $1,871 on the $25,000 portfolio. To our $100,000 portfolio, we're showing a 2% gain. And the reason it's only 2% is because we are far more spread out. We have way more companies invested here. So manufacturing and industry, we are about half pink and half green. So half of it is down, half of it is up. Consumer goods, we're trending a little bit more towards the green side. We're coming back there. Finance, we do have one. Manulife is on the positive side. The rest are down. Most of them are less than 10%. We have hit 3 this month that have just gone over 10%. So resource and commodities, solid green here. Utilities, total solid green here. Look at this. We've got some really good increases here. We've got 15%, 17%, 11, 2 10s, and an 8. So really good, strong gains in the utilities and the resources sector. Your 2% savings account certainly couldn't match that. So our $100,000 portfolio is actually down a bit this week. We're down to $100,007 for a dip of $194, but we still have a gain of $1,450 on the overall portfolio. Our dividend income is also unchanged, and our annual dividend income for the $100,000 $100,000 portfolio is $2,462.57. So let's keep an eye on the markets this week and see if we can't get some of these pinks going more towards the green next week, and we'll see if we can get a bigger gain. So I look forward to sharing all of this with you next Monday. Have a great week.